Hey, I just want to give you a real quick commentary on something that was buried in the news today, and that's the disclosure from the recent Berkshire Hathaway's 13F filing that Warren Buffett has now divested from the gold mining company that he purchased a couple quarters ago. Now, if you'll remember, about 6 months ago, I did a video on exactly why it's nonsense and you shouldn't have even cared that Warren Buffett's company had a purchase in a gold mining company, and I put no credence in these 13F filings. In fact, usually the only reason I read them is for amusement. If you want to know more, you can check out my audio podcast, episode 200 of the Wealthsteading podcast. But what I really find funny in this is that I'm not seeing all the fanfare that I did 6 months ago when the people that are really enamored and fanatical about gold, how they all jumped on and pointed to the fact that Warren Buffett was finally investing in gold, which is something he had in the past said that he wouldn't do. I also think it's humorous that Warren Buffett is always touted as a long-term investor when it doesn't take much research to see that many times he holds positions over a very brief period of time, which is exactly what happened in this case. Now, the other thing I want to mention is specifically about gold. If you've listened to my opinions in the past, you know that I'm not a fan of gold. Now, don't get me wrong. I think that gold can be used as a short-term trade. I've talked about that in the past. You can go look up my previous videos or podcasts to hear my thoughts on that. But I think gold is a horrible long-term investment. And in fact, I think it's so bad that I have never owned gold long-term other than the wedding band that's on my finger. Now, if you're truly infatuated with gold, you don't care what I think. I'm not going to change your opinion, and that's not my intent. Listen, it's your money. Do with it as you please. But for anybody that may be sitting on the fence and wants to take a rational, mathematical approach to whether or not gold and precious metals are a good long-term investment that hedges against inflation and is a store of long-term value, well, I've got a homework assignment for you. Go back to the late 1970s, early 1980s. This is in the Jimmy Carter, Ronald Reagan era. Read what was being said then about the national debt and runaway inflation and where the prices of precious metals were going to go. And then take a look at the price of gold in 1980, and at the same time, look at where the S&P 500 was. Now, fast forward here some 40 years, you'll see that the fear and Chicken Little narrative about hyperinflation and the store of value that gold and precious metals hasn't changed. But if you do the math and you compare the price of gold today along with where the S&P 500 is and where that was back in 1980, well, you do the math for yourself and you draw your own conclusions. And that's not an aberration. Take just about any 10-year period, and you'd be hard-pressed to find a time when gold or silver have beat the S&P 500 in performance, and in fact, you'd be hard-pressed to find a time when they actually kept up with inflation. And if you don't like that statement, you're definitely not going to like the most recent episode of the Wealthsteading podcast. That's episode 323. I'll be releasing that this week, and in that episode, I'm going to tell you why I think we are potentially in a long-term bull market, and I'm not worried at all about all the gloom and doom talk about a market collapse that's supposedly right around the corner. Well, hey, as always, thanks for watching. Until the next episode, this is John Pugliano wishing you the very best returns.